Ladies and gentlemen, good day and welcome to Steelcast Limited Q2 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference call is being recorded. I now hand the conference over to Mr. Ronak Jain from Orient Capital, the investor relation partner. Thank you, and over to you, sir.
Good evening, everyone. Welcome to the Q2 FY24 earnings conference call of Steelcast Limited. Today on this call, we have Mr. Chetan Tamboli, Chairman and Managing Director, along with Mr. Subhash Sharma, Executive Director and Chief Financial Officer, and Mr. Umesh Bhatt, Company Secretary. This call may contain forward-looking statements about the company which are based on beliefs, opinions, and expectations as of today. Actual results may differ materially. These statements are not guarantees of future performance and involve unforeseen risks and uncertainties that are difficult to predict. A detailed safe harbor statement is given on page number 2 of the investor presentation of the company, which has been uploaded on the stock exchange and the company's website as well. With this, I now hand over the call to Mr. Chetan Tamboli, sir, for his opening remarks. Over to you, sir.
Thank you, Orient Capital. A very good evening to everyone on this call, and on behalf of Steelcast Limited, a very warm welcome to you all for this Q2 FY24 earnings call of the company. I hope everybody had an opportunity to go through the Q2 results and investor presentation, which has been uploaded on the stock exchanges and hosted on company's website as well yesterday. In Q2 FY24, as anticipated due to geopolitical conditions, high interest rates and elevated inflation rates across the globe, and as informed to you during Q1 investor call, that we will have softer 2 to 3 quarters. Our year-on-year and quarter-on-quarter revenue has seen a degrowth. However, despite degrowth in revenue, our EBITDA and PAT margins have shown consistency and stood at 28.8% and 18.3% respectively. This is due to several factors such as higher exports realization compared to domestic sales, cost optimization measures, savings in power expenses on account of solar power plant, reduced input cost, savings in product cost, especially the external machining cost, improved operational efficiency. Due to structural shift in global environment and India's rise as a global power, a global manufacturing shift has begun, moving away from China. Alternative supplies to China are being exported by Europe, US, and rest of the world. This change is going to benefit us, and we as Steelcast are well positioned to grab this opportunity and will capitalize on the same in the near future. We intend to do this by leveraging our key strengths such as unique business model, technology, R&D capabilities, location advantage, manufacturing skills, global footprint, and market customers. Speaking about the financial performance for the second quarter of FY24, we achieved revenue of 101.6 crore, reflecting year-on-year decrease of 16% and a quarter-on-quarter decrease of 15%. Our EBITDA stood at 29.3 crore compared to 32.6 crore in the previous quarter. However, EBITDA margins have improved and stood at 28.8% compared to 27.3% in the previous quarter. EBITDA margins are substantially higher than our targeted EBITDA of 20-22%. Likewise, our profit after tax are at 18.6 crore, resulting in PAT margin of 18.3% as compared to 17.6 crore of PAT and 14.5% of PAT margin in Q2 FY23. Even if you compare PAT of H1 FY23 to H1 FY24, they are 31.81 crore and 38.8 crore respectively, showing an improvement of 21%. In Q2 FY24, export revenue experienced a growth of 13% and domestic revenue shown a degrowth of 45% on a quarter-on-quarter basis. However, the domestic revenue share is expected to show improvement in the coming quarters due to stable Indian market as compared to global markets. Domestic and export share of revenue during the quarter is 30 and 70% respectively. In Q2 FY24, our successful repayment of the entire short-term debt totaling to rupees 23.6 crore has led to an attainment of complete debt-free status as of September 23. Suggesting our rationalization plans, both our renewable energy plant, example solar and hybrid, are operating satisfactorily as regulatory issues relating to our hybrid power plants have been sorted out beginning July. Both power plants are generating expected savings. As all of you are aware that both these power plants are projected to yield annual power cost savings in excess of rupees 11 crores. The savings in the hybrid power plant, which started off in July, but we will be receiving the savings effective October onwards. So July, August, September savings will come in the month of October, current month. We are pleased to inform you that the company has commenced serial supplies of products to the North American railroad industry. At this juncture, when we look at a decade back, our company was very much dependent on only one industry, that is mining equipment industry. However, with our continuous efforts, our order book at present is well diversified across different end user industries, with railways gaining more traction. We visualize stability in markets in coming quarters at this point of time. Global situation is expected to improve significantly in the coming 2 to 3 quarters. At the same time, we also foresee many things positive which will further improve our overall operational performance. These tailwinds include improved pricing, savings in power costs, cost optimization measures, stable input and other costs, higher productivity and better operating efficiencies. Thank you, and we can now open the floor for questions and answers. Questions, please.
Thank you. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Sanjay Shah, KSA Security Private Limited. Please go ahead.
Yeah. Good evening, gentlemen.
Good evening.
My question was, Chetan bhai, thanks for a nice brief summary of the result and the prospects ahead. Sir, I have a question to ask you was regarding how do you see which are the new verticals or new customer which we are foreseeing in the coming future, like we have been supplying to North America rail industry. So what is the opportunity there, and what are the new opportunity you see in next coming few years?
Yeah, Sanjay bhai, very good question. Only thing is we will not be able to give names of the customers due to confidentiality reasons. But we have as of now 3 customers in the North American railroad industry, and the market size of the North American railroad industry is also very large, and we just need a very, very small share of that market, which we are quite confident that we should be able to penetrate in this market. And I'm quite hopeful that maybe Q4 onwards we will see a reasonable ramp up in supplies to the North American railroad industry.
So what percentage of our sales do you foresee from this segment itself?
In FY25, we should surely do about 8% of our sales.
That's good. Sir, any other visibility, any other products or customer sector where we are trying to...
Only thing is, most of you know that the geopolitical situation in the whole world is quite disturbing now.
Right.
So, to some extent, it's the attitude of the customers or the connected people are, wait and watch kind of an attitude. But I personally believe that somewhere from the 4th quarter onwards, things have to stabilize.
Right. Chetan bhai, you highlighted about some on a hybrid power, that is power savings. and we have already been started using hybrid power. So what else we can do on that side? Because we see our power cost ranging around 13% upward. So is it possible to bring down by few percentage with this renewable?
Yeah, absolutely. The power cost is the annual savings are, in excess of 11 crores. So the power cost will come down, and approximately about 75% of our consumption is catered by the solar and hybrid power plant. And the reason for keeping a lower number, 75%, is that in case we consume less, then the generated power is sold only at 2 rupees 60 paisa. So we would then lose money. So, and as and when volumes go up, we will continue to invest for our own consumption. We may increase capacity of solar, or we may increase capacity of hybrid, depending upon the government regulations and the pricing aspects.
So my last question was regarding domestic market, sir. How do you see that? How that is panning for our business?
We didn't do very well in the domestic market, mainly due to the end users were liquidating inventories. But things should be better from next financial year onwards.
Thank you, Chetan bhai. Thanks for answering my question.
Thank you. Thank you.
For many other questions.
Thank you. The next question is from the line of Ashwini Agarwal from Demeters Advisors LLP. Please go ahead.
Chetan bhai, good afternoon. Congratulations on a pretty decent set of numbers.
Yeah. Good afternoon, Ashwini.
So first question is, domestic market, I mean, we keep reading about how the capex is going quite well, especially government capex on infrastructure. And you mentioned in response to the previous question that there were your customers were liquidating their inventory. How much time do you think it will take for things to turn around? And a related question is, when I look at the tractor sales numbers, and that's an industry where products go, those numbers have been quite robust, both from Escorts and the others. So, is there anything else that's hurting the domestic revenue?
Ashwini bhai, in between your speech was very low, so I didn't get the whole question. But if you see the tractor output now, tractors have only iron casting, and we don't make iron casting. We make only steel casting. So that's one part. But as I said in the Q1 investor call, that once the inventories are liquidated through the entire supply chain, we should be up and running. So I expect things to stabilize by end March 24. So did I answer your question?
Yeah. That did come through. That's fine. Chetan bhai, another related question is that there has been a plan to probably start a new site, a new manufacturing site at the company. Has there been any progress that you can share with us at this point?
As we said during the investor presentation in September, we have all the blueprints ready. We have all the layouts ready. Our proposals have been going around in different parts of the world. But I think it's, as I said earlier, during answering the first question, that people have gone into a wait and watch mode. So probably, when the geopolitical situation improves, probably things will then start moving. But so it should take at least somewhere Q4 onwards.
Okay. All right. Thank you, Chetan bhai. All the best.
Thank you. Thank you.
Thank you. The next question is from the line of Harshal Solanki from Equity Capital. Please go ahead.
Hi, team. Good afternoon. Sir, I had a few questions. First is on the export front. What are you hearing from the customers? Is this slowdown temporary or has the cycle peaked? Because post the Caterpillar's result, there is some apprehension that we may be at the peak of the cycle. So what are you hearing from the customers in this regard?
What we have been hearing for past a couple of months is the excess inventories which were there, which is being liquidated, so the volumes are lower. Once this is sorted out, we should start seeing some moderate growth.
So we should consider this as temporary and nothing such, right?
This is what we are hearing from all our customers. So probably we can safely assume that this could be of temporary nature. Unless something drastically goes wrong with the whole world, then it could be different thing. But the feedback we have is that this is temporary.
Okay. And so we started supplying to ARR this quarter. So what was the contribution from that?
This quarter was just, I think 2.5 to 3 crores. And there will be some improvement in Q3, further improvement in Q4, and of course, a substantial number of railroad sales in FY25.
Do we have any order book on this front?
Say that again.
Do we have any orders in hand from the ARR?
Yeah. We have orders on hand, and on that basis, I'm giving you the actual numbers of Q2, and then some improvement in Q3, and then Q4.
Okay, got it. And sir, on the ground engaging tools, we were expected to get some visibility in Q2. So where are we?
As I just said, because of the geopolitical situation, people are into a wait and watch mode. So we'll have to wait for 1 or 2 quarters, till people start taking decisions. But there is demand. People want to shift on a very macro level. People want to shift to India, and within India, whoever are the best players will get some contribution of reducing dependence from China, and Steelcast is quite well positioned to do that. So all these things put together, we should have good opportunities going forward.
Okay, so last question on the defense side. Have we got any new orders for the tracks, and are we looking? What's the status on the new products or new orders that we could get from the defense?
The first the trial sets have been approved. We are going to do 5 more tracks before end of March, and then we'll have to wait for the government to open tenders, because all the procurement is based on tenders. So we've been told that somewhere in the next financial year there will be tenders coming, and we'll have to bid for it. So we are in line with that. Only thing is the bureaucracy sometimes is delaying things.
But we had some other products also which we have developed. So are we using any traction for
other products? There's no movement on that. We have made samples. We have submitted them. We are waiting now for them to have new tenders which will be bidding for it. But as of now, we don't see any big visibility in the defense sector. As in when opportunities come, we are quite well positioned there also.
Understood. Thank you so much, sir. I'll follow that in.
Thank you, sir. Thank you.
Thank you. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Mahesh Attal from Attal and Associate. Please go ahead.
Chetan bhai, congratulations on great set of numbers.
Thank you.
The volume numbers for this quarter in tonnage, first very good to this. Also, I would like to know from American railroad industry, you said that FY25, 8% of sale could be coming from there. So, if I take it on a tonnage basis, that means you are expecting somewhere around 600 tons of quarterly business from them.
This is good. I told about 8% for the next financial year, please.
Yeah. That is FY25 only. I just wanted to know what could be the number for FY26 and FY27, if you have the numbers or you are at, you could foresee the demand.
The FY26 will surely be better than FY25. And also FY27 will be better than 26. Only thing is, at this point of time, we really don't have numbers which we can share with you for 26, 27.
So, if you must have done a base study, like what is the American railroad industry total altogether? In a tonnage, if you want to just measure it in tonnage.
Yeah, it should be about 500,000 tons.
500,000 tons. And you are expecting somewhere around not about.
Now this 500,000 ton, there will be many types of products. There will be low-end products, high-end products. So wherever we are focusing, that volume could be about 100,000 tons. And so up from 100,000 tons, what we are aiming is 2,000 tons maybe next year, and then slowly increasing those numbers.
Okay, fair enough. What is the volume quantity for this quarter?
We did 3,107. We did about 3,200 tons.
Oh, that's almost a fall of 20%.
Yeah, because if you see, the sales have also been a degrowth. No?
So basically, so what has led to, the margins slightly moving ahead? What has actually come in this? Because I think the production side, you are not having any leverage for this quarter.
See, as I said in the initial talk, that we had a slightly better realization in exports because of the exchange rate. There were savings in power. The input costs in Q2 were lower than Q1, so that led to this. Some operational efficiencies. So these are all bundled together, and that's how this result is.
Also, if I remember correctly, in your last call, you said that FY25 we could reach a capacity of 60%, and then upwards of that in the coming year. Are you still with that guidance, or you want to revise it or something?
We should revise it, but because of the disturbed scenario worldwide now, we really can't predict an exact number. Maybe hopefully in the next investors call, we should be able to do this. So when you're nearing completion of the year, we might have a good visibility.
So basically, right now, even we are not very sure of covering a 50% thing that you have actually anticipated earlier. In last Concall, you said that we'll be ending this year at 50%, and then maybe
this year will be maybe a little lower than 50. Next year will be higher than 50, but let's see. We'll try and give some visibility in the next call.
Okay. And my another question would be, I think the different thing is can you please elaborate what kind of product this is? And is this vehicle thing? The body of the vehicle that you are actually doing for the defense? Or is it what exactly?
Yeah, these are components for different defense vehicles. It will be difficult for us to share exactly what they are on the call because of confidentiality reasons. But if you ever happen to visit Steelcast, we will probably show it to you here.
Okay. And what kind of how many people are bidding? In this particular segment currently in India bidding for the same?
Say that again. What's your question?
I mean, who's competing with you on this side? I mean, how many players in this particular segment for you?
We don't know. I mean, in the defense sector, there are a couple of players. We don't have exact information, but there are at least 7-8 players in India who are doing similar type of work.
Okay. So one more thing, Chetan, just see, we are doing great margins, and all hats off to you. You have still maintained the margins at the levels that it's on the higher side always. But just wondering, with the operating leverage coming about, because suddenly you'll be increasing the capacity. Sorry, I'm talking about the utilization. So do you see that the leverage resulting into higher margins in future?
See, I have been always saying that we aim around 20-22%, but then get away, the extra 3-4% by various measures. So that's what should continue. Now there will be many factors as we move forward, but I think we should be happy with whatever we are doing now.
Yeah, that's right. I mean, even the American railroad industry, you are expected to maintain the same thing, right?
Yeah, I mean, as a company, the policy is to work around 20-22% and then end up getting a little more. So that's the endeavor we have, and we will try hard to perform like this.
Also, during this quarter or certainly in the next quarter, do you see any new segment opening for you in the domestic market? I mean, are you applying for something, or are you doing R&D in certain areas which could be a big thing? You could like to tell us about that?
If you go through our few investor presentations which are on our website and also on the exchanges, our existing end users are written there. The focus areas are also written there. So at the moment, whatever is given, whatever is in public domain, the efforts are on, and we should surely succeed in that.
Okay. Fair enough, Chetan bhai. All the thank you.
Thank you very much.
Thank you. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. The next question is from the line of Rashmi Sharma from Summer Wealth Managers Private Limited. Please go ahead.
Good evening, everyone. First of all, congratulations, sir, for making Steelcast a debt-free company.
Thank you.
Yes, sir. So, sir, my first question is regarding the capex. That what amount of capex can we expect in future, and how much capex we had spent in first half of our FY24?
To answer your question, the capex for the future, we have given in our presentation that there are different projects we are working on, and so those capex numbers are also there. But depending upon which one we will go first, we don't have a clear idea now. But those, if you can refer those projects where we have written work in progress, so those are the ones. And in the first half of this year, the capex is around 8 crores.
Okay, sir.
Thank you.
So my second question is regarding what is the management guidance regarding the future top line and bottom line for this year and for the coming years?
I think it's very difficult to give out, numbers, the sales number for the year end and next year. But we have said that there will be a degrowth of about 15% compared to last year, so that should be the top line. And from the current year's number, we should do at least 10% better next year.
Okay, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Rahul Jain, an individual investor. Please go ahead.
I'm audible, sir?
Yes, sir. Yes, please.
Yeah, thank you for the opportunity. So my question is, what are our revenue targets for this fiscal and the expected revenue growth for the next few years of our company, which has recently initiated our serial supply to the US Railroad. Also, sir, can you provide some insight into the number of customers we have been added that has been added during this period?
Now, as I said, compared to last financial year, there will be a degrowth of about 15% this year. While we will have degrowth, but the operating team at Steelcast is working extremely hard to protect the bottom line, which we want to protect this in this year. And next year, we should do 10% better than the current financial year.
Okay, sir. So my next question is also, sir, we observed a shift in our revenue distribution, with domestic revenue surpassing the export revenue in Q1, while we have also seen in Q2 a notable increase in the export revenue. So, sir, could you provide some insight and
see, every industry segment and within the industry, a particular customer, they don't go in tandem. So we had higher domestic revenue in the first quarter, and then we have the lower domestic number in the second quarter. But ultimately, once the year is over, we should be around anywhere from 55 to 60% range, which is exports, and balance will be the domestic market.
Okay, sir. Thank you. My question has been thank you, sir.
Thank you. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Varun Mishra, an individual investor. Please go ahead.
Hello. Yeah. Hi, am I audible?
Yes, please.
Yeah, hi. Yeah, actually, I had a question, like, given that a company's EBITDA margin is surpassing the initially set margin, like the targets which were set, so like, should we consider revising the EBITDA margin target, or like these would be the stable numbers, like preceding quarters as we see?
So I just said in degrowth, we are trying to protect the bottom line. The bottom line should not go down, and we are striving very hard, and it's our endeavor, at least this year, that let's have a flat bottom line compared to last financial year. Let there be a degrowth, and for the future, we will have probably next year we could see a 10% growth in revenues compared to this year.
Okay.
Yes, please.
Okay, yeah, fine. My question is answered. That's it.
Thank you. Thank you, sir.
Yeah.
Thank you. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. The next question is from the line of Mahesh Atul from Atul and Associate. Please go ahead.
Chetan, thank you for taking my follow-up.
Thank you.
What is the cash on our books as on 30th September? Hello? Am I audible, sir?
Yes, please. Yes, please.
Yeah, what is the cash in our books as on 30th September?
You mean pre-reserves?
Pre-reserves, yeah. The free cash.
Do you have a second question?
There will be a follow-up if you can tell me the cash.
While we give you this number, you can ask your second question.
Okay, just wanted, yeah. So basically, see, I don't see any, you also said that there is no, like, will be at 50% this year and 60% maybe or 60-65 next year. So I don't see any capex because we are already at 29,000 tons or 30,000 tons. So I think the capex requirement for you down the line 25, 26 and 27, it will come somewhere around in 27. And if you can quantify what would be the major capex at that time and what is the value of that capex. Also, what are you going to do with this cash? Because your ROEs will be, your return on capital employed and ROE could suffer because of holding to this cash position, as you know.
Holding this cash is basically reserved for doing the capex in the coming 6 months' time or so. So
what would be the capex? What could be
the opportunities are immense. We are working on several fronts, and on a very macro level, over 4-5 years, we aspire to reach at least 1,000 crores of sales. So the dialogues are on in different parts of the world, and as and when they materialize, we will share with the investors. And so keeping free reserves, maybe it could be temporary in nature, as we want to continue investing from the free reserves what we have. Yes.
So what's the cash flow? You have
the free reserves in fixed deposits is, I think, about 2 crores as of September 30th. And I would request all investors to be patient. And the world is going through turmoil, so there will be some kind of pause happening not only in our industry but across all industry sectors. So I can say, but once again, that there are huge opportunities for this company, and we are quite prepared to encash them as and when, and we continue sharing with the investors.
My bit, it's a great thing, sir, because I understand that we need to hold certain cash, but just wanted to, are there any, as a policy, do we have anything like, is there any, on record that this is what the capex that we're planning to do, or maximum this is what we will be looking at for this year?
Yeah, I think a very good question. Yeah, I think whatever you're asking is already uploaded in the month of September on our website. The likely capex scenario, what we are doing. It also says about our treasury policy, which is also given there. So if you go through that, you will have all the answers.
Fair enough, sir. All right.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Anirudh Shetty from Solidity Investment Managers. Please go ahead.
Yeah, hi. Thank you for the opportunity. Sir, I had 3 questions. I'll give it question by question. So my first question is, do you see scope to improve our net working capital days from these levels?
Please repeat your question.
Sir, my question was net working capital days, which is say about 75 days as in, when one thinks about a more long-term steady state number, do you see scope for improving this further?
Your voice is breaking and we are not able to understand your question.
Is this better now?
Yeah.
Sorry, I was on my earphones. I'll just repeat the question. Our working capital days is about 75 days at present. Just wanted to understand, is there scope for improvement going forward and see this number settling on a more medium to long term?
See, our product mix will have anywhere the throughput time of 60 to 90 days. So we are averaging around 74, 75 days now. And if you really ask for improvement, surely there is room for improvement. We should knock this down by at least 10%, in the coming few quarters.
And this improvement would come from where?
See, this is all connected to the throughput time, so there will be a bottleneck in the entire value stream. So once you start debottlenecking them, the working capital number of days will come down.
Got it. And my second question is, over time we have de-risked from an end industry perspective. Mining has come down while the share of earth moving has gone up. So just wanted to understand, how is earth moving different from mining, and what is the end industry application here exactly?
When you say mining, the equipments are used for mining the commodity. When you say earth moving, it is moving the commodities from the mine to wherever it has to move out. So that's the basic simple difference.
Right. But sir, the question I wanted to understand is, if say it is in a way earth moving is mining linked because you're moving commodities from the mine to elsewhere. If there is a mining downturn, then do you feel that your earth moving category would remain resilient, or that also could see some impact?
See, by and large, they are all connected to mining, but the types of equipments are different, the products are different. So obviously, if you mine less, you move the commodity less also. It goes in tandem, right?
Got it.
So yes, your question is right, but of course, we are separating this because the equipment, the products are all different between mining and earth moving.
Got it. And so my final question is, right now we do casting and machining, and some products are either casted or some are casted and machined. So typically, what is the margin difference? What is the margin bump up that we get, by doing the value add of machining? How much does the margin move? An approximate number?
Yes, maybe 1 or 2-3% more. But it really all depends on what customer needs. Some may need product without machining, some may need with machining. So what we try to aim 20-22% is the composite number, and then by various. Of course, I'm repeating what I've said earlier. But with combination of factors, we end up getting few percentage points more.
Anirudh, we can't hear you there. Could you please speak?
Can we take the next question, if any?
Okay.
Yeah.
The next question is from the line of Suchi Nagar from SN Investment. Please go ahead.
Hi, thanks for taking my question. Most of the questions have been answered, but if you can repeat on the capacity utilization, what we can expect for the next 2 quarters. So if you can highlight on.
Overall, for the year, we should do around 43-44%. Next year should cross 50 plus.
Okay. Thank you for answering.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question for the day. I now hand the conference over to the management for the closing comment.
Yeah, on behalf of Steelcast and myself and our Executive Director and CFO, Mr. Sharma, our Company Secretary, Mr. Umesh Bhatt, we really thank you all for attending this call and taking time out to interact with us. We look forward for the next investor call and wish you all a very nice day and happy Diwali and happy New Year in advance. And we also want to thank our IR partners, Orient Capital, for organizing this call. Thank you. Thank you once again.
Thank you.
Thank you.
On behalf of Steelcast Limited, that concludes this conference. Thank you for joining us, and you may now disconnect.